2024 as the economy shows clear signs of cooling down, ING says. So there you have it, folks. There is a lot of news going on right now about the all the experts are stating, and the Federal Reserve is indicating that they may be cutting rates up to 6 times next year, 6 rate cuts. So what would that mean for you as a buyer? Well, that would mean this is just a prediction. So no one knows what's going to happen. But what they're seeing is that as the economy is recovering, they will be able to do some rate cuts. There are factors that will have to hit, obviously, and no one knows whether rates will ever go up or down. So we can only go off of speculation. Now, what's that mean for you as a buyer right now? And what's that mean for you as a buyer next year? Well, if you're waiting for rates to come down before you buy, then you may be working to buy next year. And so what that means is by the end of the year, they're predicting maybe 1.5% total rate cut. So those 6 cuts throughout the year are going to be small increments that may get us down into, the 1 to 1.5% less rates. We could see 6% next year, and maybe lower, who knows? So if you're waiting till next year to buy as the rates come down, that would be good news for you. Should you wait to buy until the rates come down? There's another question altogether. Because if you're wanting to buy a home, what's going to happen when those rates go down? More buyers are going to enter the market. Your competition is going to rise, meaning that you may pay more for a home and also be competing with other buyers and losing out on more homes that you love. You'll also, while competing, will reduce the amount of terms that you can get. Right now, sellers are giving out seller credits and stuff like that. Seller credits weren't being paid out as much in the last couple of years. So as competition rises, inventory lowers, your terms are going to be worse for you as a buyer, competing with other buyers, and you may end up paying a higher price. Now, will a higher price with a lower rate necessarily mean that you're going to get better pricing than you would today? That's not always true. A really low rate at a higher priced home could still give you a better price than if you bought right now. However, if you are considering buying and you are ready to do that, and all you're doing is waiting for rates to come down, now would be the perfect time for you to buy. Because right now there's no competition or low competition because of the rates, and everyone's scared to get into the market. So you have low competition. Sellers are providing credits. Housing prices are stagnant right now. They have stabilized. And so you're getting much better terms as a buyer. And so if you can afford the payment now, then next year, at the end of the year, 2024, if the rate drops 1 or 2%, you can refinance to that lower rate. But your rate will never get any higher than when you lock it in now. The other benefit for you is you'll start gaining the equity that's going to come with a hotter market. The housing prices are going to go up. That means your house is naturally going to gain more equity. So waiting till next year, paying a higher price, you're going to lose out on that equity. So if you're thinking about buying and the only reason you're waiting is for rates, talk to me, reach out. If you have any questions, comment below. Subscribe to my YouTube channel or all my socials. I'll have my link in the comments. But really, it comes down to when you're ready to buy. If you can afford the payment, then it's a good time for you to buy. And I would love to help you with that. Thank you so much for watching, guys, and have a great